Welcome back to Road to Fire. We're a family of 4 documenting our journey to FIRE, financial independence, retire early. Let's chat about our 2024 Q1 dividends payout. I will share details on how much we made, our investment strategy, and current passive income streams with all real numbers like always, so please hang with me. Now, we don't have a dividend strategy. If you came here to get a detailed outline of top stocks to invest in to grow a monster dividend portfolio, then you've come to the wrong channel. I mean, we do have an investing strategy and it's been working, but we didn't sit and design the most optimal dividend portfolio to fund our early retirement. Now, kudos to everyone who has done that. A part of me is jealous as dividends next to royalties are probably the best form of passive income and are truly passive. We took a different, more lazier approach to investing that is tried and true. So what we did and do is invest in a one fund strategy, and we invest almost all of our dollars in VTSAX. And the byproduct has delivered solid monthly dividends. Because we invest in index funds, we are inevitably investing in a diverse array of stocks, many which give out dividends. When we developed our FIRE number, we didn't include other streams of passive income. We only focused on covering our expenses with our stock portfolio. Dividends are just an added bonus. We currently reinvest all of our dividends and plan to even after FIRE unless things go awry. I like that we have it, but I don't track it or review it as much as I should, or the other key financial numbers that I track on a monthly basis. Most of our dividends are paid out quarterly throughout our brokerage account in Vanguard. But we do have an M1 finance account that has many individual dividend stocks, but I haven't funded that as much over time, and that definitely might change in the near future. But first, what are dividends? According to Investopedia, a dividend is a distribution of a company's earnings to its shareholders and is determined by the company's board of directors. Dividends are often distributed quarterly and may be paid out as cash or in the form of reinvestment in additional stocks. That is what we do. We invest back into the stock, amplifying our contributions for that quarter. Simply put, a dividend is a reward for investing into a company. It's like, hey, thanks for putting your faith in us, and because you have, here's a small token of our thanks to you. And the best part about dividends is that you do absolutely nothing to get it. Also, for many blue chips dividend-paying stocks, they are consistent over time. It's rare to see a dividend-paying stock remove this benefit. It happens, but for most stable companies, it's very rare to see them remove their dividend payment, even if times are hard. I'm thinking back to my undergrad investing classes, and I must say I don't recall ever learning about dividends. A complete miss and a shame overall. But it's free money and I can't complain, and I'm happy with the dividends we've received so far this quarter. So here's a breakdown of our 6 brokerage accounts for both my husband and myself. Now, if I had a magic wand, every investment we own would be in one brokerage account, but that's not the case. I have worked to consolidate this over time because at one point we were on Robinhood, E-Trade, and even TD. The more brokerage accounts we had, the more scattered our investment strategy was. We've now simplified things overall and gotten things to a better place. So today, our Fidelity and Empower accounts hold our work 401ks, Bank of America and Health Equity holds our HSAs, and we have our M1 finance account for a majority of our individual stock portfolio. The remainder of our investments and the bulk of what we own are in Vanguard. Vanguard holds our IRAs, Roths, UTMAs, and after-tax brokerage account. Now, when I reviewed our dividends, I looked at our Vanguard account and particularly my Vanguard account. But when I say my, it's the account tied to my Social Security number. But we see all of his or her money as our money, as we are the old school flesh of my flesh, bone of my bone kind of a couple. But for the purpose of this video, I pulled the Q1 dividends tied to my Vanguard account, so this doesn't include our total picture, but a good chunk. So let's jump into it. Vanguard broke out our dividends by non and taxable. So here are our non-taxable dividends. Keep in mind again, this is from the accounts in Vanguard tied to my Social Security number or my name. And that includes our 2 kids' UTMAs, my Roth and IRA, as well as our joint after-tax brokerage accounts. So a total of 5 accounts. The balance as of April 8th was about $445,000 in Vanguard. So in Q1, for our non-taxable dividends, we received about $1,000 in dividends in total. This would be from my IRA housing my old company 401ks and the Roth I opened in 2012. And there was also an additional $100 from the other income category, not entirely sure where that came from. Now, I am pleasantly surprised at how high this number is for the quarter, coming in at about $333 a month. I don't really look at these numbers on a regular basis, but I'm happy to see the byproduct of our one fund strategy and excited to see this grow over time. Okay, jumping into our taxable dividends, which include my 2 kids' UTMA accounts and our after-tax brokerage account, we brought in about $500 in dividends in Q1. The balance of our after-tax brokerage account was about $109,000 at this time. So for $100,000 invested almost solely in VTSAX, we are getting about $110 in dividends a month. To be honest, I don't know if this is good or bad or if we're right on track, but what I do know is that this is free, so I'm definitely happy with it. I know I should be tracking these numbers, and although we didn't factor this income into our FIRE number or to cover expenses when we do reach FI, it's important to at least get an average or a sense of our expected dividends when we get to that point. But overall, I'm happy we are getting these types of numbers even with the one fund strategy. But a teeny weeny part of me is thinking, how much more dividends a month could we be getting if we had been a bit more purposeful on our investment strategy? Okay, that thought is gone. We are still going to follow our strategy around VTSAX. Okay, right now we're averaging about $500 a month in dividends from our $445,000 portfolio. Our current total portfolio is closer to $700,000, so I expect us to be averaging closer to $600 a month in dividends. But in the last 2.5 years, we focused so much on creating new streams of income that we haven't been tracking our passive income as we used to, or I haven't been. There are a lot of moving factors in this road to FIRE, and I'm seeking simplicity and trying not to get lost in endless spreadsheets and charts. But don't get me wrong, I love to geek out in Excel, but there has got to be a limit or I will drive myself and my husband crazy. But the most encouraging revelation was the dividends from our $100,000 after-tax brokerage account. This account will act as our bridge account to FIRE, so it would more than likely be the first account we tap into. So getting $110 a month in dividends is a great start. So, just for kicks, if I did simple back-of-the-envelope math and extrapolated our strategy to a $1 million portfolio, we would get about $1,000 a month in dividends. Now, I would love to get $1,000 a month in dividends before we hit FI. Now, this is not a hard set goal, but an unofficial goal. I do feel that the FI community is split between hardcore dividends investing strategy and the good old 4% rule strategy. Now, we opted for the standard 4% rule strategy because we are passive investors and have been working tirelessly in the last 2 years to build our income. But now that we have built a solid income in a lower cost of living location, our next focus is investing. Now, I don't see myself making drastic changes to our current strategy, but I might build in a few more monthly paying dividend ETFs into the mix, but we'll see. But let's put this into context. What does $500 a month in dividends really mean today? So here are our core monthly expenses, which I built our emergency fund off of. So say we decided to cash out on these dividends and use it to supplement our income today. Taxes aside, the additional $500 a month income would help us cover all of our primary utilities, or it would help us cover all of our household expenses, or nearly all of our groceries for a family of 4. Looking at the dividends this way puts things into perspective, and imagine how many more expenses we can cover once we continue to build our brokerage accounts over time. So I got to thinking, what are our current monthly passive income streams? Now, the word passive, I can spend an entire Sunday and preach on the word passive, but to align with the FI community, these are our current passive streams of income by month. So we have dividends, as we just walked through, at about $500 a month. Now, if you know me, you know I like rounded numbers, so I always round down for simplicity when presenting them here on the channel. We receive about $175 in monthly interest from our emergency account and Capital One. Now, I know there are other accounts with better APRs, but this works for us now. We also get about $200 back in cash back from our Saver One Capital One account or credit card that we use. We use our joint credit card for many of our monthly expenses, and this is where we get this income. And then our last passive stream of income is from our rental. We average about $400 after paying all of our monthly expenses tied to the property, including property management. Now, this is an average, as some months are higher or lower due to maintenance needs. In total today, we average about $1,275 in passive income monthly. And I'm glad I looked at this number. Individually, these numbers don't seem so impactful, but when you pull it all together, it's like, wow, we are finally making strides in our investment strategy. So next month, we will probably be able to add YouTube income to the mix. Now, let me pause for a second. By no means do I consider YouTube to be passive. YouTube is probably the hardest dollar I have ever earned, and I've been working since I was 12. To be honest, to make a single video, it takes hours. And to think of an idea, compile the data, then get the images to demonstrate the data in a simple, concise way, another set of hours, but I do love it. I love talking about money. I love this online community. I love getting educated, but it's definitely 100% not passive. Now, I understand why YouTube income is considered passive. I would say a video weeks from now that is still earning funds is passive. But honestly, the first 4 weeks after you make a video, unless the algorithm picks it up, you are definitely in the hole. One time, and only one time, I calculated my hourly YouTube rate, and I think I was making about $3 an hour. The hardest part about YouTube is talking slowly and articulating my words. I naturally talk fast. I mean, I was raised in a family of 9, so if you want to be heard, you have to talk faster than the other person next to you. But I've learned to slow down and record these videos, and it has helped me articulate my words much better. But I hope to share my first remonetized YouTube paycheck next month and add that to the list of passive, quote-unquote, passive income streams. Now, if you made it this far, thank you so much for watching. But don't forget to like, comment, and subscribe below. Until next time.